Good morning everyone and welcome back to the channel. It has been a volatile 24 hours across global markets as investors grapple with a good news is bad news scenario regarding the US labor market and the Federal Reserve's latest moves. Let's start with where the major indices stand as of today, 17th December. The story in the US is one of divergence. While the Dow and SP 500 dipped slightly, the Nasdaq managed to snap a 3-day losing streak, buoyed by a relief rally in big tech after days of AI bubble fears. However, internationally, we saw a much bloodier picture, particularly in Asia, where the Nikkei plunged over 1% as chip sentiment cooled globally. The primary driver over the last 24 hours has been the fallout from the delayed US non-farm payrolls report. Here is the macro breakdown. The employment paradox. November data finally hit the tape, showing 64,000 jobs created, beating expectations of 45,000. Normally, that's a win. However, the unemployment rate jumped to 4.6%, the highest since July 2021. This confirms what the Fed has been fearing. The labor market is softening faster than the headline job numbers suggest. The Fed's third cut. Last week, the Federal Reserve delivered its third interest rate cut of 2025. Today, fresh analysis of the Fed's summary of economic projections suggests they are eyeing even deeper cuts in 2026 to prevent a hard landing. Oil energy slump. We saw a massive sell-off in energy. WTI crude dipped below $55 a barrel for the first time since early 2021. This is a double-edged sword. It helps cool inflation, but it's a massive red flag for global industrial demand. Major players like Phillips 66 and Marathon Petroleum saw their stocks slide 5 to 7% as a result. Politics and economics are colliding today. In the US, all eyes are on the transition of power at the Federal Reserve. Trump the Fed, President-elect Trump has signaled he has finalized his pick for the next Fed chair. Frontrunners like Gavin Hassett are being closely watched by bond markets. There is some anxiety about whether a new chair will prioritize the White House's agenda over the Fed's traditional independence, though current inflation break-evens suggest the market isn't panicking yet. UK fiscal warning. UK Chancellor Rachel Reeves sparked concern today by suggesting that tax rises are inevitable in the upcoming budget. She stated that each of us must do a bit to address the fiscal gap, a comment that has put UK domestic stocks on the defensive. Australia's budget deficit. In Australia, Treasurer Jim Chalmers released the MIFO. The forecast shows a $37 billion deficit, triple last year's. Critics are calling it reckless spending that could force the Reserve Bank of Australia to keep rates higher for longer, despite the global trend of cutting. Crypto has had a wild 24 hours, finally showing some signs of life after a brutal week. Bitcoin. After plunging to $85,000 earlier this week, Bitcoin has recovered to roughly $87,400. Institutional gold standard. Fidelity CEO Abigail Johnson made waves today by confirming she personally owns Bitcoin and calling it the gold standard for digital assets. Furthermore, Fidelity reportedly scooped the bottom, buying $26.7 million worth of BTC during the recent dip. Divergence. While BTC stabilized, Ethereum remains under pressure, trading near $2,940. We are seeing a clear flight to quality within crypto, where Bitcoin is sucking the air out of the room as altcoins struggle to find a floor. Total crypto liquidations reach at over $570 million in the last 24-hour window, showing just how thin the liquidity is right now. To wrap it up, the market is currently in a tug-of-war. On one side, we have the Santa Claus rally hopes fueled by the Fed's dovish pivot. On the other, we have a rising unemployment rate and a collapsing energy sector signaling a potential slowdown. Watch for retail sales data coming out later this week. This will tell us if the consumer is finally breaking. Further comments from the Trump transition team regarding the Fed chair appointment. Bitcoin's ability to hold the $85,000 support level.